Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me to the new week. Well, the Australian dollar over the last few days has been relatively bearish as the bears continue to press their paws on the market, and on Friday it did record a low of 75.31 before initial profit taking took place. Although the technical implications, as you can see from the RSI and the stochastic and the MACD is on the lower side of the range and also oversold for the RSI, is I do expect to see a little bit more impulse to the upside this week and probably some more profit taking. The initial resistance is at 76.05, but a cap around 76.5, where I believe the market will return renewed selling interest or supply zone. From the given facts of how the market's been trading over the last few days, I would still look for a target of 75 cents or towards 74.85. The economic release for this week, China today will publish its PMI data on manufacturing and service sector growth. Then tomorrow we have the RBA to announce its benchmark interest rate and publish a rate statement which outlines the economic conditions and the factors affecting the monetary policy decision. It is widely expected that the RBA will keep rates unchanged and to the historic lows of 1.5%. Then on Wednesday, we have the Federal Reserve to announce its latest monetary policy and its key level of what it's thinking towards a rate statement of how the market will perceive whether we are looking for a rate hike very soon. Looking at the dollar index, the market has actually paused slightly and taken a breather. Therefore, you can see the euro did take a stab to the downside on Friday, but it found support around 120.54. Although the market's taken out the level of 121.80 and fallen over 100 points, like most signals in the market and also break levels, either we need to see confirmation to those signals or the levels are likely to be retested. Now, I'm looking for a slight retracement for the start of this week towards a 121.70-90 level, but I expect to see supply to return from there and the market to decline. With the double top neckline taken out at 121.80 gives me a broader picture to 118. Well, the dollar yen is taking a bit of a step back from the resistance seen at 109.70, and as you can see from the present level that we are looking towards the region of 108.85. It is viewed beneath there, buying should come back into play, and anywhere from 35 stages of recovery up towards 109.70 and eventually onto 111 as an initial target. We need to first get out of this overbought condition before the next move up and to clear that level of 109.70. Well, since the break of the trend at 140.35 for sterling is the fact the market has crushed the supports all the way down and now reaching this target and exceeding beneath 138.55 does give us the next move to 135. It is viewed that from the recent comments from the Bank of England, it's speculation that the bank will actually not raise rates next month. According to the official figures, growth in the UK slowed by 0.1% in the first quarter, well below the previous 0.4, or the expected 0.3. With Mark Carney clearly putting the signals out that they're not looking to hike rates in May, has actually seen the pound plummet, as you can see. I still hold the view that we could see a rate hike, but more to the fact is if we do, the pound is at a better level in case we see a bit of a knee jerk to the upside, as we have sold off initially from the highs around 143.5, so quite a substantial fall so far. We are oversold, so I'm not too far away from seeing a small recovery or some profit taking. The gold outlook, well, we did slip underneath 118 briefly before staging a recovery back above 124. Although there is some divergence on the bullish case, we could see a move up towards the region of 28 to 33, but I expect to see the market maybe retesting the downside a little bit more, as the geopolitical risks have really come right off the table now, with North Korea talking about a meeting in the next few weeks with the US. and also Syria has actually quietened down, along with the trade wars at the moment with China and America also quietening down, which has somewhat squashed the appetite for demand for the safe haven. So we can still see the lower side of the range this week around 14, even though we might see a small impulse up first. The silver outlook still holds focus towards the bullish foundations around 1520. Not getting too bearish down there, as I would like to see buying step back in and look for a recovery eventually towards the recent highs. And rounding off with oil, overall, I still believe the market is bearish and looking towards the region of $66 a barrel. We could see further extension to the downside and even come in lower towards the region of 63, with the resistance capped at $70 a barrel. Well, that wraps up for today. Thank you very much for joining me, and I hope you enjoy the new start to the week.